What happens when you let a high-performance AI take a microscope to your stock portfolio? Today, we're doing exactly that. I'm running a Gemini evaluation on 5 of my top holdings: Amazon, Meta, Google, AMD, and a major newcomer to the public markets, CRCL. We're looking at the 2025 performance, the AI tailwinds, and whether these are still buys or buys heading into 2026. Let's dive in. First up, Amazon. 2025 has been the year of the flywheel 2.0. While the stock was a laggard early in the year, it's found its footing. AWS is back to roughly 20% year-over-year growth, largely because everyone is renting their compute power for generative AI. The Gemini take? Watch the margins. Amazon hit nearly 12% operating margins this year by regionalizing their logistics. They aren't just selling more, they're keeping more of every dollar. Analysts are eyeing a $300 target for 2026. If you're holding, you're betting on the AI-fueled cloud re-acceleration. Next, Meta. This is probably the most controversial buy of the year. On one hand, Mark Zuckerberg's Llama models are the gold standard for open-source AI. On the other, the EU is breathing down their neck. Just this week, Italy ordered a halt on WhatsApp AI terms. Despite the regulatory noise, Meta is a cash cow. They're trading at about 29 times earnings, which for a company growing earnings at 17% is actually considered reasonable by Wall Street standards. Gemini's verdict? Meta is the value play of the Magnificent Seven. Then we have Google. If you thought Google lost the AI war in 2024, 2025 proved you wrong. Alphabet has been the best performing Mag 7 stock this year, up over 60%. Why? Because they own the whole stack. The chips, TPUs, the model, Gemini, and the distribution, search and YouTube. YouTube revenue is growing at 15%, and Waymo is finally expanding into new cities. Some prediction markets even have Google overtaking Nvidia as the world's most valuable company by late 2026. This isn't just a search engine anymore. It's an AI utility. Now for the hardware. AMD. This one is a bit of a roller coaster. We saw a massive 150% rally after their AI chip breakthrough in April, but we're seeing some air come out of the tires lately. The challenge? Competition. Nvidia is still the king, and even the big cloud players are making their own chips now. Gemini's risk assessment. AMD is in a consolidation phase. It's a great long-term hold for the data center boom, but don't expect the straight-up gains we saw in early 2025. Support is holding around $200. Keep an eye on that level. Finally, the new kid on the block. CRCL. After their successful IPO earlier this year, CRCL has become the institutional bridge for stablecoins. With BlackRock taking a 10% stake and a favorable regulatory shift in the US, USDC is becoming the base layer of internet finance. Evaluating a fresh IPO is always tricky, but with nearly $100 billion in transactions settled, CRCL is proving it's not just a crypto play. It's a high-margin financial infrastructure play. It's the highest risk, highest reward name on this list. So that's the portfolio review. A common thread? AI isn't just a buzzword anymore. It's the primary driver of every single one of these balance sheets. What do you think? Is Google still the top dog? Or is the AMD dip a buying opportunity? Drop a comment below with your stock of the year for 2026. Would you like me to run a deep dive technical analysis on one of these specific tickers next?